Well, hi everyone. Welcome back to Verifiably Random. This is season 3, episode 7. And this will be a very exciting episode because we have the Chief Legal and Operations Officer of the foundation with us, Jennie Levin.
Hi, everybody. Hi, so happy to be here. Thank you for having me.
This is going to be super interesting topic because we'll talk about the Algorand Foundation's move back to the US, and we're going to talk more broadly about the regulatory picture of the US and how it's changing over time. And before we dive into this, just one quick heads up is that you guys should stay until the end, because at the end of this episode, as always, we will have Fred Estante, who's going to talk about what's happening in DeFi land. So make sure to stay all the way to the end to hear Fred talk about what's new. So Jennie, welcome. Regulatory landscape. There's so much to talk about. And before we dive in, maybe it's good to kind of give our viewers and listeners a little bit of a perspective of who you are and your background and what you've done in the past. So maybe let's start with that. So what drew you to Algorand and what excites you about this role?
Everything excites me about this role. And what drew me to Algorand is the blockchain itself, the fact that it was an original, you know, blockchain started way back at the beginning, the tech, the instant finality, the real world use applications. And then, from there, and also what drew me to Algorand was I came from Figment, and we'll talk about this in a minute, but I was, siloed off into this staking as a service world. And at Algorand, you are dealing with a plethora of legal and regulatory issues, and you get to dig into the product, you get to dig into Parawallet, you get to dig into humanitarian work, real world assets. How does all of that fit under the legal and regulatory world? And to me, that's so exciting. But I will say this, and I'm not just saying this because I'm doing this podcast with you. The real thing that drew me to Algorand was the team. We have such an outstanding team at the foundation, and everybody's in the trenches together working hard, and being a part of that has been incredible. That's what drew me, and that's what keeps me.
So before you went into crypto, you were a federal prosecutor for about 10 years. So tell me about that experience of being in law enforcement.
Being a federal prosecutor was an outstanding experience. It's something that I had wanted to do since I was a little girl. My dad is a criminal defense attorney, so we would sit around the table, and I would always battle with him on the legal issues. So when I got the opportunity to be across the aisle and become a federal prosecutor, it was super exciting, and it was something, like I said, I've always wanted to do. I was at the U.S. Attorney's Office in Chicago, so it was the Northern District of Illinois, and I prosecuted everything from large scale drug trafficking cases where gangs and cartels were importing narcotics into the United States from Mexico and Colombia, to, racketeering offenses involving, gangs, to financial crimes, money laundering, public corruption. It ran the
Wow.
gamut. And so, at the end of the day, you get up every day and you feel good about what you do because you are helping people, right? You see victims, who are defrauded of all of their money and their retirement funds, and you're doing your little part to be able to help get justice for them and help them recoup those funds that they've lost.
Yeah. And so from that world, what made you go into crypto? That's typically people always ask this question like, how did you get into crypto? What was the thing that drew you in? So what was that for you?
For me, it was I got an opportunity to work at a company called DraftKings, which is a sports betting and daily fantasy sports company. And this was right after the Supreme Court had overturned PASPA. And you know, it was super important for DraftKings to have a regulatory attorney who was an adult in the room, who understood the nuances of legislation and regulation, and was able to interface with the regulators on a state level, and discuss the big issues, think through issues. And that excited me. And so I went to DraftKings, and while I was at DraftKings, one of the founders was very into crypto, and they wanted to start an NFT marketplace. And I was fortunate enough to be able to lead that project from the legal side and work with the product team to build their NFT marketplace from the ground up. And that's how I got into the crypto space. And then we started getting involved with staking and ran a validator on Polygon. So it sort of expanded from there.
And then you fell in love with staking and you joined Figment.
Right. It was a love story for sure. It was the old path where people are like, "I'm not leaving." I mean, I loved DraftKings. I still love DraftKings. And I was not planning on going anywhere and then a college friend of mine was like, "Just meet with the CEO of Figment. Just meet with him." And so I said, "Okay, I'm not leaving, but okay." And then one thing led to another and I thought the team there was great. I still think that they're great. I thought what they were working on was interesting, and I joined at a time where there was no regulatory clarity around staking like we have now, or much more now. Again, I was gonna be able to take existing legal principles and extrapolate them and apply them to novel situations, which really does excite me. And so I made the move to Figment and had a great time and then was lured away by Algorand.
Yeah. And so, but as Figment, I mean, you joined Figment and you were working on regulatory affairs for like staking at a very difficult time, right? Because you talked to the SEC. The SEC was very different then than it is now. So that must have been quite challenging to get to make progress there.
It was really challenging, and it was really challenging because the SEC was bringing enforcement actions against Coinbase, for example, Kraken, who were offering staking programs. Now, not all of them were true staking as a service like Figment offers, but yes, we were facing an uphill battle because people see an enforcement action and they see the word staking and they're like, whoa, 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 I'm not getting anywhere near that. I don't want to touch that. And so it was a matter of not only interfacing with regulators, but interfacing with our customers to help them understand the nuances and the differences and why the current enforcement actions didn't apply to a staking as a service provider like Figment.
Mm.
But, and as we were able to move through that process, we had multiple meetings with the SEC. We met with congressional offices on the Hill. We educated them. We talked to them. And as I'm sure you're well aware, the SEC has issued staff guidance, which is not rulemaking, but it is really significant, talking about how staking is not an investment contract and therefore not a security and even liquid staking. So we've made tremendous progress in the regulatory world when it came to staking, and it was a fun uphill battle.
Yeah. So back to Algorand. So what do you see as the priorities for you in your role here?
Navigate the uncertain regulatory environment in the United States. And I say uncertain because we do have a lot of clarity, but it is still fragmented and uncertain. Also, navigate the regulatory environments in all of the jurisdictions in which we operate. It's not just the United States. Work with the product team to iterate and develop new and exciting products that we're helping our developers build or supporting our developers in their own implementation and building of their offerings. Um, Thinking through, how do we innovate but also protect the foundation? Those are my main goals.
Specifically, like if we want to launch something like Algorand, how do we make sure that we do sweepstakes the right way, right? Is that a good example of that?
Yes, I was on a call earlier with Marc annoying him about, the compliance with sweepstakes and lotteries. All of those things are fun to think through, though. Different issues come up as you're working through different ways to run campaigns or with the Para wallet when we're, offering different types of products or different types of token access. And these are complicated issues that require a lot of thinking. But I think what's also important for any good in-house counsel to do is not just say, no, we can't do this, this is risky, but it's about what is the risk, right? Let's try to quantify it the best that we can. And then what's the potential upside here? What's the potential, revenue opportunity? And how do we advise, our developers who are launching products? How do we work with them to get them to understand the balance? And it's a sliding scale across a spectrum, and you have to be cognizant of that.
Yeah. So I'm sure one of the big priorities for you will be this kind of move back to the US. Stacy announced this a while back, said that the foundation is going to move back to the US. We haven't announced all the details about this, but what can you share about the work that's going on there?
Well, we're very excited. And, we reached a point in our roadmap and the broader market where a meaningful US presence is not just strategic, it's essential. So Algorand is purpose built for real world application, financial infrastructure, tokenized assets. And in 2025 in the United States, we're seeing a real shift, right? And we're going to talk more about this, but US regulators are opening up to dialogue. Enterprise interest is ramping up, and legislation like the Genius Act are creating clearer rails for stablecoins and tokenization. So if you combine the regulatory environment with our own readiness, it's clear that we need to make this move because there's an alignment between policy, product, and market demand. And stay tuned, and there's more to come on that.
Great. So maybe let's dive a little bit deeper into kind of the regulatory landscape in the US. And so there's two kind of pieces of legislation, one that's already passed, one that is not yet passed, right? And maybe we can talk about each one of these pieces separately. So the first one, the one that's passed, is the Genius Act. And this has to do with stablecoins and how stablecoins are being regulated, right? What are the main kind of elements of the Genius Act, and what does this mean specifically for Algorand?
Sure. The Genius Act was signed into law in July of 2025. And as you mentioned, I mean, it's landmark legislation for the crypto community because it's the first crypto legislation that passed and it had bipartisan support. And it does establish a regulatory framework for payment stablecoins. It defines payment stablecoins and sets out who can issue them, under what conditions they can be issued, fully backed with cash or short term treasury assets. It requires transparency and disclosure. So, reserve backing, audits, redemption mechanisms. It clarifies that compliant stable coins are not going to be classified as securities or commodities, under certain definitions when they meet the rules. It provides multiple pathways for issuers. So, you can have a federal charter by a national bank or a national trust bank, or you could have state level regulation if certain thresholds are met. And then, on that note, it sets these regulatory oversight mechanisms. So the Office of the Comptroller of the Currency or state regulators, depending on which path you take as a stablecoin issuer.
Right. And so one of the things I've always wondered about, that I always thought was a little bit weird about this legislation, is that somehow yield-bearing stablecoins are not allowed. And it's like, to me, when you think about like the benefits of crypto for the regular user, is it should be that your money always works for you. Your money should, generate yield even while you're sleeping. Like that's one of the key promises of crypto. And so somehow that is not possible with the Genius Act. So, like, why is that?
Yeah. The short answer is banks really heavily lobbied against having any type of interest paid on stablecoins or yield bearing stablecoins. So you're right that the Genius Act does prohibit issuers from paying interest on stablecoins. But in classic banking markets, banks pay interest on deposits, right? So it's contradictory, but the banks will say there are many more regulations that apply to banks and stricter rules, and therefore they should have more leeway when it comes to these issues. Now, there's an ongoing, really big fight between banks and stablecoin insurers happening right now because there's a loophole in the Genius Act. The loophole is that the Genius Act says that crypto exchanges can offer rewards on stablecoin holdings, which essentially mimics interest. So banks are viewing that as undermining the intention of the prohibition on
Right.
yield bearing stablecoins. So now we are having banks pushing for Congress to enact additional legislation, modify the stablecoin legislation to close this loophole. And we're also seeing banks really fighting against any type of lax regulatory review or oversight. They're really pushing for strict regulation. And the interesting part is that a lot of the nuances regarding the rules governing stablecoin issuers have yet to be determined because they're going to be implemented by the OCC, by the Treasury. These are rules that are yet to be created. And so it's going to be a continuous back and forth between
Right.
stablecoin issuers and the banks.
It's interesting because it's actually no different than the way credit cards work, right? If you issue a credit card, you can provide rewards to your customers. You can get 2% cash back or points or whatever it is. It is no different than something like that, right? So it should be, reasonably allowed, you would imagine. So how is like one other what you start seeing now is like the US has its own kind of regulation for stablecoins. Europe has its regulation. I think Singapore has its regulation. Um, China is like putting regulation in place that says like, stablecoins should be central bank managed. And so you start seeing all these kind of stablecoin legislation pop up like globally, and it's kind of all different. And what do you think about that? Because I think this is going to be an issue because stablecoins are in principle permissionless, or you can transfer them anywhere in the world. And so if you have all of these different regulatory regimes now that are governing stablecoins, like that's probably going to become very complex.
I totally agree with you. I think it really needs to be more cohesive, and we, as the United States, need to work with other regulatory regimes in other jurisdictions to streamline this process because it's not practicable for a stablecoin issuer in the United States to develop a stablecoin that is compliant with every single different jurisdiction's
Right.
rules regarding stablecoins. And that ultimately hurts the consumer, right? It hurts the purpose of stablecoins, which is to be able to flow freely and have easy access to a form of payment. We're not going to be able to achieve that with, fragmented regulation. And so listen, I agree with you. I think that we're working on trying to come up with a more streamlined approach, but we're not there yet.
Yeah. Okay, let's switch gears and let's talk about the Clarity Act. Talk to me about that. First of all, it's not passed yet, right? It's still under development.
Yes. So I
What
think
is
that's
it?
really
What is it? And what's the state of it?
Yeah, so I think that's really important for our audience to understand is the Clarity Act, which is a market structure legislation, and I'll explain more about what that is not yet law. So the bill was passed by the House again in July. It was passed on July 17th, which was the day before the Stablecoin Act was signed into law, and it's now awaiting Senate action. And it also has strong bipartisan support. So its purpose is to establish a more comprehensive regulatory regime for digital assets beyond just stable coins, which is what we just discussed. It's supposed to clarify definitions like what's a digital asset, what's a digital commodity, what's an investment contract, and delineate the regulatory roles of the Commodity Futures Trading Commission, or CFTC, and the Securities and Exchange Commission, which is the SEC. So it introduces the concept that, unless determined otherwise, a digital asset might default to the category of security unless part of a mature blockchain system, in which case it may be a digital commodity. And it also provides safe harbors for certain issuances, standardized registration and disclosure requirements for platforms, preemption of conflicting state level laws in some respects, right? The federal government is very, very loath to preempt state laws. So, in short, this is a broader market structure bill aimed at digital assets generally, but it's not yet law.
And the idea is to define more clearly what is a security versus what is a commodity, and what are the rules that you have that assets have to have and the blockchains have to have in order to be classified as one or the other,
Correct. And
right?
also, then who's going to supervise you based upon your
Yep.
classification, right? Because it's very confusing right now for people when they don't know what it is that they have or how it's going to be classified and who's going to be their master.
The definition of whether something is a commodity or a security very much depends on this notion of a mature blockchain, right? That plays an important role. And so what is how do they define a mature blockchain?
Yeah. So to qualify, first, I think it's important to understand that under the Clarity Act, it will introduce this new self certification test to determine whether or not you qualify as a mature blockchain. Right. So you get to self certify this. And to qualify as a mature blockchain, you have to have a substantially completed value mechanism, allow for meaningful user activity, operate through transparent and open source code, prevent unilateral control or privileged system access, and ensure that no affiliated party has excessive governance power or token ownership. what's important to understand is, I just rattled off to you a statutory list of these factors, but uh, this is not a comprehensive test in and of itself, right? These are prerequisites to self certification. So a
Yeah.
blockchain system has to meet these before an issuer or affiliated person or related person can certify it as mature, right? But I think that the SEC will be authorized under this statute to establish alternative criteria for maturity through rulemaking. It can't modify or add to what I just told you, but it can add additional criteria.
And how's Algorand doing versus that definition of mature blockchain?
I think it's doing really, really well. We no one person does have control over the Algorand blockchain. We are, for all intensive purposes, uh, very decentralized. We have, staking. We have open source code. We're very transparent. We have the community involved in the governance process, chiming in and voting on things. So I think, all in all, when we compare it to the statutory, criteria, um, we're stacking up very nicely. We're talking about the mature blockchain test, and we're talking about the Clarity Act, but I want to be realistic with our listeners. The Clarity Act is coming from the House, right? And the Senate also is trying to come up with its own market structure legislation that has some differences from the Clarity Act. And recently, within the past several weeks, some Democratic senators came out and they issued a letter in response to some of the provisions or, drafted provisions of the Market Structure Act from the Senate. And it's, it's created this divisiveness between, Democrats and Republicans on this market structure legislation. And potentially could have significant implications for DeFi. And so, you know, the DeFi community is really fighting back against the notions that were put out by these Democratic senators. For example, Democratic senators want to give the U.S. Department of the Treasury the power to create a restricted list of DeFi protocols that they consider too risky. They want to impose a KYC flow on front ends of DeFi systems, including non custodial wallets and UI providers. They want to broaden the definition of intermediary so that anybody who designs, employs, operates, or profits from a DeFi front end could be treated like a financial services intermediary. These are non starters, right? So it's just know that, Algorand is working hard to fight against these as well as other players in the DeFi community. But we have a long way to go if this is going to be the starting point to reach meaningful market structure legislation.
Yeah, and it should really be a bipartisan initiative. This is more important than any single party. It should really be bipartisan, in my view.
Absolutely.
Um, yeah, yeah. So you mentioned KYC, which leads me to my next question. I'm actually very curious about this. Like the one of the big friction points in crypto still is the notion that like every single provider has their own kind of KYC processes, and of course there's strong regulation, anti-money laundering regulation that is behind all of this. But it is a kind of a major friction point, and so you also see a tendency now, like a big evolution towards decentralized identifiers, the verifiable credentials, having all of this kind of stored on chain. So you can imagine a world where you'd KYC once, you store it as a verifiable credential in your crypto wallet, and then you're done. And like anybody accepts that KYC. And I think it will be like a massive change in usability of blockchains because you take away a bunch of like friction. So why is this not happening? Is there a regulatory reason why this is not happening, or like why can't we get like do it once and apply it everywhere type of system for KYC?
I don't think it's so much a regulatory reason. The way that sanctions laws work is there's strict liability, and each company is responsible for conducting its own due diligence and its own KYC or KYB or KYW, which is, know your wallet. And it's incumbent upon that company to make sure that they're not engaging in trade with somebody who is on the sanctions list, whether it's, an individual, an entity, or a wallet. So because of the potential severity of the consequences and the strict liability, each company is probably wanting to take ownership of the task of screening. Now,
Mm.
as you pointed out, if there is this one reliable source of truth that it has been audited and is in full compliance and really reliable, perhaps companies can get comfortable with relying on this one source of truth as opposed to doing their own type of screening for sanctioned entities or individuals or wallet addresses. The complicated part too, though, is that Algorand, for example, and a number of the players in the blockchain ecosystem are not, financial institutions, and therefore they're not subject to what's called the Bank Secrecy Act in the United States. The Bank Secrecy Act has, AML restrictions and requirements that are very stringent and that banks and other financial institutions must comply with. So when they conduct their KYC and their KYW screening, they're also checking the boxes required of them by the Bank Secrecy Act, and those are much more stringent. And so some companies
Um,
might not want to go to that level, right? At Algorand, we of course, have best practices, but that doesn't mean that every single box that a bank is required to check is one that we have to check. The risks are different. And so, how do we create one source of truth that allows for risk triaging or
yeah.
variation to meet the needs of that individual company? That's going to be the
Yeah,
tricky.
you almost need like different standardized levels. Level one, you can do this and this, this. Level two, you can this. But yeah, so yeah,
The other thing
it'd be
is,
lovely, it'd be lovely to have a system like that because it's a really really big friction point right now.
absolutely. And there are third party companies that try to help, of course, automate this process, whether it's through, the KYC screening or the wallet screening.
Yeah.
But yes, when you have to do it repeatedly, I can imagine how frustrating that must be.
So we talked about legislation. All of the legislations are kind of at the federal level. Is there state level legislation as well that we have to take into account? Is this or is most of the legislation that's related to crypto is it federal?
No, so there is state legislation that you have to be mindful of, and that you have to care about, right? Because it's not in the United States, it's not a one size fits all. There's a lot of regulatory fragmentation. So you're dealing with not only multiple federal agencies, a lot of which we've talked about, the SEC, the CFTC, the Treasury, IRS, FinCEN, but you're dealing with 50 different state regimes that each have their own money transmitter rules, consumer protection laws, tax interpretations, and sometimes digital asset specific licensing. And I don't say this to scare people off from being in the United States, although it sounds scary. It just means that you have to be prepared and you have to be thinking ahead and you have to be creating a compliance patchwork framework that you can bob and weave, for lack of a better way to say it, depending on what's happening in the states and what's happening, federally.
So the bottom line is you won't be without a job anytime soon, given all the complexity.
That's why I say all of this. Yes, I make it seem very, very complex so that Algorand keeps me around.
Nice. Yeah. So maybe last question before we move on is like, what do you think are the kind of biggest policy developments that we should be expecting in the next year or so as it relates to kind of crypto regulation?
Federal market structure legislation, as we just talked about, I think that that's a big one because you know as the regulatory map becomes more clear, the incentives for enterprise blockchain players, including protocol layers like ours, becomes more executable. State level regulation, as you just mentioned, and licensing catching up, right? So even if we see federal frameworks improve, states are going to continue to shape the operational realities for crypto companies. As I mentioned, money transmission, digital asset licensing, tax treatment. And then, I think real world asset tokenization and stable coins becoming mainstream in, institutional infrastructures. With frameworks like the Genius Act, establishing a clearer rules for payment stable coins, we're going to see more institutional entrants and more tokenized assets and more integration between the crypto native world and the traditional financial services world.
I think what that was to me what's very exciting about that is like when when you talk to like enterprise customers, a lot of enterprise customers or a lot of enterprises in the US are pretty scared of doing anything that's crypto related. And you mentioned the word crypto to them, they kind of run for the exit most of the time. And so I think at least with that, with the legislation becoming more positive and providing this kind of clarity, I think it'll open up the door to look at blockchain technology and look at it for the value that it can bring, and not look at it as a casino of meme coins only. And so I think to me that is the biggest potential that I think this will unlock is it'll provide some sort of a safety mechanism to like large companies who now can look at the technology, for what it's worth and actually invest in it without being scared that they're going to be like dragged into some sort of meme coin scam.
100%. Listen, without clear regulation, it, crypto and blockchain technology will never become mainstream, right?
True.
People and large companies are always going to be too timid to get involved unless they know unequivocally that they are doing nothing wrong. They have too
Yeah.
much to lose, right? Because a lot of times those companies, the blockchain industry and the crypto industry is a side business for them, right? Their bread and butter. They have all of that to lose if they run afoul of securities laws or money transmission rules or tax
Yeah.
rules, right? So
Yeah. Awesome. Well, Jenny, this has been an awesome conversation. So I know you're active on LinkedIn, you're active on Twitter, like on X, I should say. Where can people follow you?
yes. So at Jennie Levin, all one word on X, and also at Jennie Levin on LinkedIn as well.
Excellent, excellent. I'm sure we can continue the conversation online. Okay, so now over to our next topic, and let's welcome Fred to give us an update on our ecosystem. Fred, how are you?
Hey, Mark, I'm doing good. How are you?
Doing awesome.
Fantastic. Well, before we dive in on the ecosystem news, I just want to say, Mark, that I think Thanksgiving is just a few weeks away in the United States. And I just want to put out there on record right now that I'm thankful that Jenny is here because she's certainly keeping me and the foundation out of trouble with all my DeFi ideas. Okay. So I'm very happy that she's here because otherwise things would be bad. But at the same time, though, I got to say that I haven't heard from Jenny in a few days. So maybe she finally found out how to block meals like. I don't know. I got to figure that out.
Yeah,
I
no, it's just that I'm so impressed with your suit today. You look so handsome, and I also have learned how to block you on all devices. Yes.
all right, thanks for that, I guess, Jenny. Thanks. But all right, let's jump in because we do have some cool updates to share since our latest episode just a few days ago. The ecosystem is booming, so let's jump right in. Of course, starting with DeFi news because I'm a little biased towards DeFi. Folks Finance just launched an audit competition with Immunify for the Wormhole Entity contract. And that's pretty timely because they just announced that the Folks token is going to launch in a couple of days on November 6th. So that's super exciting, very big news for our ecosystem. Looking forward to that. Similarly, Alpha Arcade just reached their highest volume day ever with over $120,000 in volume in a single day. And they just announced a few hours ago that they just reached $3 million in total volume in the platform since launch. That's super exciting. They just did another round of USDC payouts to token holders from all the platform fees collected in all the active markets over the last few days. And they also just announced that very soon their users are going to be able to use credit cards, Apple Pay on the platform, and they're also going to add multi-chain integration to allow people from other ecosystems to use, other crypto tokens to participate in the market. So that's super exciting. It's going to unlock, a huge wave of new users to them. So very much looking forward to see what the team builds next. The team at Compex also does not stop building, and they just launched Waypoint on Algorand, which basically allows for scheduled and programmatic stablecoin payments on chain. Very nice, very easy to use. So I highly recommend people check it out. Moving on from DeFi a little bit towards gaming, Fractal Labs trading card game, their TCG demo, is live on the Steam store, and they just took the first slot in Steam's next fest event. So pretty cool to see them featured up there. They have a premiere space in the banner. Really cool stuff to see. Nice job, team. Astro Explorer just joined the team from Jfinity IO on a really nice interview a couple of days ago. I highly recommend everybody checks it out. It was a fun conversation. In Realms, they're also on fire creating all sorts of fun and different games. They just announced Space Miner, which is a new game that allows you to earn some Nico tokens. So go check it out. On the more techie side of things, the Pearl Wallet, continues on fire. They just released a bunch of updates to the iOS app, to the Android app, with swap improvements, bug fixes, and they also just brought back the Lucky Spin that has become a community favorite. So it's a lot of fun, and I'm very happy that it's back. And to wrap up for today, ASA Stats also continues to make portfolio overview ever easier on Algorand, and they just integrated with Compact's Flux Pools. So now, everything that you have in your portfolio across all of our accounts, you can see in one place at ASA Stats. But before I send it back to you, Mark, I just want to give a friendly reminder to the community that Algorand is underway. Right now, we're nearing the end of the swap week, which is obviously one of my favorite weeks, but I like them all. They're all fun. But next week is minting week, which should also be a lot of fun. But just as a quick reminder to all the people out there, especially the people that just learned about Algorand and are catching up, you don't have to worry, okay? Because you have time. You can still go back and complete all the quests from all the previous weeks and catch up to join the fun ahead of the minting week next week, okay? So there's no rush. You can still catch up, but of course, do it ASAP so you can join the fun in real time with all of us at Algorand. Mark, that's all that I have for today. Thanks for having me
Right.
on, and back to you.
Thank you so much, Fred. Always a lot of ecosystem news. It's great to have you. So I think this is a wrap. So thank you so much, Fred. Thank you, Jenny, and I'll see you guys soon on the next episode of Verifiably Random.
Thank you.
Thank you.
Bye.